Hey guys, welcome back to another Sunday video where we get ready for the week ahead. Today we're going to be talking about everything from indices, commodities, currencies, and much more. As we get started here, I just want to say that this past week was a very volatile one, and I made a video yesterday just talking about how a lot of traders probably have not experienced the types of volatility that we saw last week. And while we did see a very large retreat in the VIX, I don't necessarily think we're going to see a huge spike like this again, right? We're probably not going to see the VIX go up to like 65 again, but there is a distinct possibility you do see some attempts for the VIX to regain some excitement. Now, really quick, before we get into a bunch of charts here today, I just want to talk a little bit about the VIX on a long-term historical basis. Where are we? Well, if we just go to really quick, I'm going to actually apply a 1,000 moving average. And what we can see here is that the VIX on a 1,000 look back period averages about 20.25, which I thought was interesting considering after all that volatility, we came right back in line with long-term historical averages to end out the week last week. That being said, if we actually look at more recent times, and if we are going to expect, a return to recent biases, that would actually suggest that the VIX could continue to go lower, which I actually do think that is likely to be the case. Even though it is an election year, even though there's a lot of uncertainty, the market is still overall, in my view, pretty strong and stable, and the VIX probably has room to continue to go lower. Now, what does that mean for my view on the stock market? Well, if we just apply some moving averages here, we never even made it down to the 200-day moving average on the S&P 500. So there is a possibility that if bears get another go here, we could see this thing go down and retest the 200-day moving average. That is a possibility for sure, but we did already tag and reject the 200-day moving average on the NASDAQ 100 index, showing again strength in the stock market. And while the S&P might not actually go down to it, the NASDAQ has already given that strong test and rejection of the 200-day moving average, which in my view signals strength on a price action basis for stocks. If we take a look at the S&P 500, this is a position that I'm already in long, and I've got a stop loss below the previous lows. If the previous lows do get taken out, then it is possible that we may go even lower, head down to test the 5,000 mark. But again, I think, and this is not certainties, as there are no certainties in financial markets, I think there is a greater chance that we have hit the bottom for this sell-off than there is, for it to be taken out. So I would say, from here, I do think there is a good chance that the lows have been put in for this recent sell-off. You have to remember that we are still in a very strong bull market. And when you do see a big correction like this or a big pullback, many people get very scared, assuming the worst, but we barely ever even got past a 10% correction. This is a very healthy pullback, and actually a bigger pullback than we saw in April before we saw a really big, strong push through the highs. I'm not necessarily saying that we go straight back to the all-time highs, but I think it's fair to say that for now, it seems like the bottom has been put in. And as long as we continue to put in some sort of higher lows, I do think that we can return to highs and perhaps continue onwards. Take a look, if we go really quick to the 4-hour chart, you can see the story that played out this past week. We had a big slide, at the beginning of the week, really, really big drop, and then the market started to rebound. This is actually where I got long. So I got long after the bounce back, but the idea for me was, I like the overall economy. We also saw services PMI, PMI, which kind of saved the day on Monday. I really like that figure, decided to get long. So market kind of puts in a higher low and then retests and breaks that low just a little bit. So it was all over the place. But what I do want you to kind of notice is that we did find this low, and then we were able to actually confidently break through the highs. To me, this signals overall a crazy week nonetheless, but that overall, even though there was an attempt to try and run back through the lows, the buyer stepped in and put in a higher low here, which, just a nice sign on the price action front. Again, I also mentioned the 200-day moving average not necessarily being hit on the S&P, but the NASDAQ really holding it. If we take a quick look at NAS, huge rejection off the 17,250 level. You can see right here, looking left, this was a really big area for the bulls. And on that Monday crash or that Monday sell-off, buyers were really there ready to buy the dip. I do think that even if you do see, markets go back and test this area, I think there's a stronger chance we see a buy the dip mentality there again. And if we do actually end up taking out those lows, I think buyers were still going to be around in the 16,000s. I do think that there is a nice amount of support for this market as it continues to go lower. I am actually looking to get more and more long exposure. I've actually talked about that recently on how if we see a take out of the lows, I'm going to be going shopping. I'll be looking to buy some individual stocks, and I've already bought a few. So just a couple names just right off the bat. I bought CrowdStrike, which many of you might know from the recent drama there with the their flaws in their technology recently. They had a bugged update that caused a lot of drama and lawsuits and stuff, but I still really like the cybersecurity industry, and CrowdStrike is a leader in it. Airbnb is a company I bought, Tesla is a company I bought, and of course good old Google, which is for me my long-term favorite stock in the financial market. So I bought this one on a dip, and we're slightly in the green already on this one. So just a couple individual stocks that I've started to buy. If we do see a bigger drop, I am looking to go shopping. So should be interesting if that can occur. So I'm actually kind of one foot in both camp. I do think the market will probably recover, but I also wouldn't mind if we go lower, because then I'll be looking to buy some long-term stocks that I've wanted to buy for a while. So I'm open to whatever happens, but I do lean towards the bullish side for the indices here, which a lot of traders have been very, very closely watching as well. I know a lot of my audience is really interested in the NASDAQ right now, which is really fun. So it's my favorite thing to trade, the indices. So I'm always glad to share some insights on that. Speaking of insights that I'm going to be sharing this week, we're going to be doing something cool. I have inside of our Discord group, we have different channels where you can see the trades being shared by myself, Frank, and Ivan. We share, entries and exits, and also our own journals as well. So whenever I take a trade, for example, an FX trade, this gets shared with full breakdowns and explanations. And I just wanted to let you know that we are going to be doing a huge discount on the Discord. So I want to encourage you down below in the description. The discount is not yet live, but it will be live Monday morning. So keep your eyes out for this, but one way to stay on the radar for that is to join the free version of the Discord, which should be linked in the description. And you can also join our free Telegram channel, which will be linked below as well if you'd like to join that. Again, totally free to join those, the free versions. And then if you'd like to sign up for the paid version, we are going to be doing a very big discount this week. So stay vigilant if you're somebody who's been thinking about doing that. Definitely recommend. Come join us, come trade with us. It's a spot to be. Anyways, let's keep going. I want to talk a little bit about gold here for a second. So gold has been interesting, and it's actually been one of our top setups recently on the Edge Finder. So has the NASDAQ and the S&P, by the way. But anyways, gold is getting a very bullish reading. In fact, a lot of indicators are signaling some strength for gold. What you'll notice is that inflation has been cooling. That's positive because interest rates are likely coming. Interest rates are falling already on the yields front. If you take a look at the 10-year Treasury, 2-year Treasury as well, and then take a look at employment data, right? Employment data has come out very soft recently overall, right? We saw the NFP report and the higher than expected unemployment rate. These things very positive for very positive for gold because of the uncertainty that comes with it. Also, the commitment of traders data still resides very strongly bullish for gold. So big money seems to be long gold. Seasonally, it's a decent time to be long gold on a 10-year historical basis. I'll show you that right now just because I mentioned that. I know that there's a lot of this stuff here that I run through quickly, but remember there's a lot to this Edge Finder thing. If we go take a look at month of year trends, and let's take a look at gold here. We're already on it. Okay, so what you can see here is that the 10-year average for gold is about a 0.9% gain in the month of August. So it's a historically positive month for gold. In fact, one of the better months of the year for uncertainty and therefore gold potentially going up. So I do like the seasonal backdrop for gold. I like the top setups indication for gold. I'm going to stay bullish on it, but this is the caveat. What I'm looking for on this one is one of two scenarios. From a price action standpoint off the daily chart, which is what I predominantly trade, If you do see this market just continue to rip higher and we actually do end up taking out those highs, then that's great news, because that just shows, bullish strength, brand new all-time highs. That would be a very positive thing. And then the pullback, right? If you get the pullback into like the 24.65 level, boom, that could be a nice continuation trade that I'll be watching for. That's scenario one. Scenario two in blue is that we do start to see this thing kind of just trickle back down into this 23.60 level, at which case I'd be looking for a possible buy. And again, still looking for new highs. And then finally, scenario number three would be if scenario two doesn't work out and we actually end up failing at that 23.60 level, I'd be looking for 2,300, in which case I feel like I'd be getting a pretty good price on gold. And then I'd be looking for, again, bullishness. So only bullish on gold, no bearish setups, because again, I think we're going to see interest rate cuts. I do think that there's still geopolitical uncertainty with the Israel and Iran situation. I mean, there's so much uncertainty in this world right now. And I like the idea of hedging a little bit with gold. So I'm looking for long setups on that front. Another setup you may have noticed is US 10T. What does that stand for? US 10-year Treasury bonds. So I'm looking at things like TLT. I've marked this up on the 4-hour chart as a possible interest for me. Didn't quite get there this week. I was looking for it. I had it marked up on my chart, and actually even shared this with members inside of my journal here. So I wrote to members. Let's see, where was that? TLT. Well, I could have sworn I put TLT in there. Did I put TLT? There it is. TLT. Yeah, so I mentioned I'm looking for this pullback here with the bounce back in yields. Bonds are moving a little bit lower, and I was looking for that pullback. You can see just barely missed it here, and then pulled back or started to go back up again. So I'm looking for this one. If it does decide to roll over here, then that would be good news for a possible entry for me. I'm watching TLT. I like this one a lot to the upside. It's kind of a top setup for me right now, just because quite literally it's on the top setups page of the Edge Finder. So I like this one a lot. Watching TLT, watching gold. You'll also see Euro USD up here. Let's take a look at the Euro against the US dollar. We can take this right here. I had this one marked up, didn't quite execute at the 50% level, was thinking about it, but shoulda, coulda, woulda. Didn't take that trade on Friday. But off the daily chart, the reason I didn't was because I'm still a little hesitant with us just hitting resistance here. I'd like to actually see this thing break through the highs. That would actually be an ideal trade from here. I'd like that trade set up a lot. So I'm watching the Euro with a bullish perspective, and we'll come back to that one if it does set up again. Another one is Pound USD. Now you might say, what about Euro CAD or Pound New Zealand? I usually only trade major currency pairs if I'm going to take a currency trade. I predominantly trade things like gold, the NASDAQ, S&P, etc. But I will take currency trades if I can find the right one. But I like the major currency pairs. I find them to be more liquid, and yeah. Anyways, Pound USD here. I also focus a lot on U.S. economic data, so it just makes most sense to me to trade something that has the U.S. dollar in it. Pound USD, I don't love this chart, even though it's giving us a bullish reading. Just not quite loving the setup here. I'd like to see, more clear, concise price action. We big grind up, big grind down. Not really loving that chart. You already saw me talk about the S&P 500. NASDAQ's getting a neutral reading. I'd like to see that one pop into bullish territory. Let's take a look at some of the bearish side. So the yen crosses, dollar Swiss, CAD yen, dollar yen. So I don't love these actually from a just kind of the wonkiness that was last week. So even though we are getting some bearish readings here on the Edge Finder, my concern with these ones are that, again, you just had kind of a global freak out event that may be, may have been a little bit overdone. But that being said, we do have to respect the scores. So, dollar yen and dollar Swiss would be two that I just look at. Take a look at this chart here on the yen. I mean, it's not a pretty chart. It's not a bullish chart in my view. You are talking about a chart that has just given back a huge amount of, of its gains this year. In fact, probably negative on the year now, right? Let's see. Yeah, well, look at that. Just about 100% of the gains. Now it's bounced a little bit though, so taking back some of the gains, but almost all the gains wiped out in just a few short weeks. That being said, I do think that there's a chance that the carry trade unwind might be behind us, which would signal possibly a bottom for this. We might, look for something like this, higher lows, etc. But there is also the chance that I just look for a technical setup on something like USDCHF as a possible hedge, because I'm very bullish on markets right now. But if the market sells off, if we see something, crazy happen and things change again, these charts are going to probably go lower. I don't necessarily think that's what's going to happen per se, but without trying to predict everything, again, the Edge Finder's giving me a pretty solid reading for USDCHF, USDJPY. So maybe I'll take a hedge position, meaning I'm basically, if this market wants to sell off again, if I was going to be in anything on the short side, it would probably be a setup like USDCHF. I actually like this setup quite a bit. That's a 100 pip risk for a possible, 350 back down. Now, I don't personally use take profit levels. I like to trail stops, but the last time I did this trade, I literally entered right here, closed right here, and it was one of my best currency trades of the year. So I like USDCHF quite a bit. Looking for a possible pullback to add a hedge position this week. If we do get that move, again, I'll probably take a small position here just to sort of hedge my bullish exposure to risk on assets. USDCHF shorts are very much a risk off kind of biased trade. So I'm watching those trades on the currency front. Quite a bit of stuff to look out for this week, to say the least. I mentioned this yesterday. If you didn't see the video yesterday, highly recommend you go watch it. But I talked about the commitment of traders data and how we saw a huge short covering in the Japanese yen, and also the Swiss franc, which showed me some very interesting stuff, right? The carry trade unwind took place heavily last week. Is that over? We will see. I would actually lean towards it probably got a lot of it out of its system. You can see that if we actually take a look at the Japanese yen, it was at one point, one of the most sold currencies, and it still overall is, but it's really come in from where it was. So I like that quite a bit. We also saw a lot of NASDAQ buying. Thought this was very interesting. Heavy NASDAQ buying, which I love to see because I'm currently bullish. Things like SMH, which I'll show you guys that in just a second. I have an SMH trade, which is the semiconductors space, heavily comprises things in the NASDAQ. NVIDIA and things like that make up the NASDAQ. NVIDIA, Apple, Amazon, all the big names that we know. But they also saw SPX buying. We saw gold buying, etc. By the way, if you'd like to try out this software that's in front of you, this is the A1 Edge Finder. It's my company's flagship tool for taking a look at macro data as well as sentiment data. There's a link in the description down below, by the way, if you'd like to get some information on the tool or try it for 30 days or just purchase it. There's also a promo code in the description as well if you'd like to get a discounted copy of the tool that I'm using. I also want to talk about the put call ratio. This was very interesting. So during this past week, we saw puts become very, very popular. The way to read put to call ratio is basically when it's low, calls are very popular. There's a lot of call volume. And when this number is high, there's a lot of put demand. And so we saw a huge amount of put demand spike on Monday and then proceed to drill lower. So thought that was very interesting. A sentiment kind of recap for the week. We got really scared and then markets started to even out. Now we're not quite in over enthusiastic territory, but I do think that we probably see the put call ratio continue lower, and I do think that stocks move higher. So we'll see if I'm right about that. If I'm wrong, I've got stop loss orders in place, but I really like things like SMH. I've got a position already on this one, and this is a very interesting play for me. SMH, high risk, high reward index or ETF. Now, I trade ETFs because I like to trade individual pockets of the stock market. So SMH, what you're getting in these companies are things, or in this ETF is things like NVIDIA. You're talking about Broadcom, AMD, all the chip making companies in one kind of stock, right? So SMH, a couple things I liked about it. From the technical basis, we nailed that 200-day moving average and the market ripped. Love to see that reaction there. Very, very strong price action at these levels. We also saw, again, really nice support around the 202.8 level, and we seem to be holding this level here as well. is 214 level where I got long. So we'll see where this one goes, but I do like the risk to reward on this trade. But please understand, these are volatile stocks, the semiconductor ETF. You can see in this last few weeks, this thing lost at one point 30% almost of its value, which is an insane drop to happen in just a few weeks. And then the bounce back has been aggressive. So if this thing returns to the high, that's not where I would take profits personally, but that would be a 31% increase from my initial position, getting back to the high. So I really like the risk reward here. I'm basically risking 9% to potentially make 31%. So to me, that's a pretty good risk reward. That's 31% of the cash that I've allocated to this position. For those of you guys who are FX or futures guys, I know that can be a little confusing. I bought shares in this. So if it goes up by a certain amount, then I make, that percentage. So if I put 100 grand in it, that would be, for example, a $31,000 profit. So we'll see. Anyways, I've got that position open. I also have a small position in IWM. Well, not small. It's a good sized position, but on the account, it's about I think it's about 12 to 15% of the account is currently sitting in IWM. Now, this is the small cap index. You could also take a look at things like RTY. This is a futures version. Took a long position on this one. I do like the idea for small caps. What you'll notice here is my positioning is way more on the risk on side, because if you're just risk on, you might buy SPY, but if you're really risk on, you might go for small caps, which are more sensitive companies to interest rates and to the economy, but then at the same time you also have SMH, which again, very sensitive to the economy and to where things are at. I personally think the economy is in an okay spot. I don't think we're going to enter a recession right away. And if I'm wrong about this, guys, what you must understand is I'm not certain about these things. I'm just making educated guesses, and that is all you can do as a trader. A good trader doesn't know what the world's going to do next. A good trader just makes educated guesses, and more importantly, even risks appropriately. So I'm not risking my entire life on these trades, right? These are just ideas that I have. But I do, feel convicted enough to put money on the line for these things. So we'll see if I'm right. I am looking for gold setups, as I mentioned earlier. Maybe a pullback happens this week. That would be something I'm more interested in. On the sectors, anything else looking interesting to me? Again, I do like consumer discretionary. I've talked about this a lot. I may look to add to some individual names if we do see a bigger stock market sell-off. I mentioned that with some of the stocks that I mentioned at the beginning. I've got lots of things on my watch list for the stock world. I like companies like Costco and things like that, but they've been hard to buy. So if we see a broader stock market correction, then I will definitely be going shopping for some great names. So I'm open to whatever happens. Just wanted to share my thoughts on everything, guys. Remember, if you want to get access to the Discord, we are going to be doing a big sale this week. So you can go ahead and join the free version. Get ready for that this afternoon, this morning, wherever you are in the world. But definitely join us if you have not already inside of the Discord, Telegram. And remember, you can also get access to a 30-day trial of the Edge Finder if you want to start using our tools to find better trading setups. Thank you guys very much for watching. Have a great week ahead.